Well, happy Father's Day to everyone out there. And of course, being Father's Day, this will be a little bit of a shorter video in that, well, first of all, there just isn't a lot of Tesla news right now or a lot of general news that is relevant for this channel. But we will have, as always, the reporting about what's coming up this coming week, as well as the pre-market analysis. But let's start off with not burying the lead from that thumbnail out there. Well, what's going on with that? Well, it turns out that, of course, Elon famously said the other day that the value just of the Tesla robots or the Tesla Optimus bots would be around 25 trillion sometime in the future. People have argued with whether he said by the end of the decade. I think he's talking about the end of the decade, where they would be building about 100 million robots per year, maybe more, but certainly on the order of 100 million robots per year. Well, of course, Cern Basher took issue with that, and Elon had agreed with Cern's analysis earlier. We talked about that yesterday, but Cern Basher said, well, wait a minute, you're not going to sell these, you're going to rent them. And Elon had agreed with that. That's what he had responded to Cern earlier. And so Cern says, so you're really not talking about the profit of $10,000 per bot times 100 million bots when you build 100 million. You're talking about the cumulative number of bots that are now in the field, and you're charging X number of rent for each one of those. So I've always talked about it in terms of being something on the order of $60,000 a year rent, but let's just say it's $10,000 a year rent. So now your $10,000 profit is no longer 10,000 profit, it's $10,000 rent. And you have maybe 200 million of these or 300 million of these now out in the real world doing work. And then the next year you make another 100 million or maybe more. So Cern says, I think you're off by a power of 10. So Elon agreed. So there you go. We have a new $90,000 price target for Tesla stock at the point where Tesla is, let's say, renting out hundreds of millions of bots at something over $10,000. I think for Cern's thing to work, maybe the number was closer to my number, 40 or 50,000 a year. We'll see how all that plays out. I think the number is at this point becomes too high, but there's a number, and 25 trillion would be enough, don't you think? All right, let's go ahead now and take a look. This is, by the way, Randy Kirk. If you ever get any value here, would you hit the like button? And if you really get some value, would you subscribe and notify? And Larry Goldberg will be back tomorrow night, so you know you want to hit the notify button, because Larry will be back on a regular basis every night as we talk about the good news, and you got all the regular programming tomorrow. Also, if you really get a lot of value out of the show, would you consider doing Patreon? That would just be lovely. Just go down below, hit the link, and go over to Patreon. All right, so here we've got what's coming up this week. Starting with Monday, we have the Empire State Manufacturing Survey. Recent surveys have been all over the place, but the Empire State Manufacturing Survey has been down consistently over, I'm going to say 15 out of the last 18 months or something like that. Well, last month it was down 15.6, and this month it's expected to be down another 10.5. So while you've been seeing tons of other manufacturing surveys showing some kind of increase, or maybe a little bit, some more than others, the Empire State is projected by those surveyed to be going down again this particular month, the month of June. The results of the month of so the median, negative 10.5. On Tuesday, we get the U.S. retail sales numbers. Last month they were flat. This month they're expecting a 0.2% increase in retail sales numbers. Again, I believe that the consumer is running out of money. So at some point, these are going to be flat to down. We'll see if that happens. Then you get the retail sales minus autos. They're also expecting that to be at exactly 0.2%, which would indicate that they also believe that autos are going to be going up 0.2%, because there's no other way you can get to that number. All right, and then we've got industrial production coming out that same day. Last month, it was at 0. increase, no increase at all. This time they're expecting industrial production to be up 0.4%. I'll take the unders on that one. I don't think there's a chance that industrial production is up 0.4% month over month. Not a chance. Anyway, okay, capacity utilization last month was a 78.4, which is a decent but not great number. They're expecting that to go up to 78.6. Once again, I think these are optimistic. I think capacity utilization, well, we've been seeing some increases here and there on manufacturing, so could be up. I'd be surprised. I'm just going to be I'm going to be negative on all these numbers. And then we got business inventories, which last month were down 0.1%. They're suggesting overall business inventories will be up 0.3% this month. That would suggest, okay, so if you got to take into consideration, if manufacturing is going down in the state of New York or the New York area, but we're seeing maybe overall manufacturing going up and retail sales going up and industrial production going up and capacity utilization. I mean, all those things would suggest that you would have maybe another flat month in business inventories, but they're suggesting the business inventories going up. But if you're only building a little bit more and you're selling quite a bit more, anyway, you get my point? All right. Then the rest of that day, we have a bunch of Fed speakers. We got Fed President Tom Barkin. We got Governor Adriana Kugler. We've got Fed President Lori Logan. We've got Fed President Alberto Musalem, and we've got Austin Goolsbee. 5 Fed speakers on Tuesday. So that could be a very interesting day. Then we have Wednesday, which is a day off. And then we've got home builder confidence coming out that day anyway at 10 o'clock. So home builder confidence was at 45 last month. That's not very confident, 50 being the kind of the regular mark. And then they're thinking it's going to stay the same around 45. I would think home confidence might be up slightly because of interest rates coming down. Anyway, 45, that's probably their guess is probably good as mine. Then we got Thursday. Okay, initial jobless claims last month were 242. That was quite a jump up. When I say quite a jump up, again, the range has been right around this number for a while. They're thinking that'll drop down a bit more, down to 236. I have no reason. I don't think they have any reason. I think they'll be wrong just because they always are. U.S. current account expected to go, it was last month, it was negative 154. And this month, thinking it'll be down 205. So increasing negativity in the U.S. current account. Housing starts last month was 1.36 million. That's annualized. They're thinking that'll go up. Housing starts going up. Okay, 1.38 million is what they're guessing at. Building permits were 1.44, and they're thinking that'll be up 1.46. So again, both of those would suggest that there would be enthusiasm or confidence or optimism on the part of builders, that they would not only be adding to the number of units under production, but also more building starts. Then you got the Philadelphia Fed manufacturing survey. Last month, that was at 4.5. I don't know what that is. I'm very sorry. I just don't happen to know that. I don't remember how that works in terms of if is 4.5 out of 5, 4.5 out of 10, or is this it's not a plus, so it's not an increase of 4.5. Anyway, last month it was 4.5. They're thinking it'll be 4.9, which seems like an increase of some kind from the Philadelphia Fed manufacturing survey again. All right, then S&P Flash US Services PMI, this is Purchasing Managers Index. That last month was a 54.8. They're thinking that drops to 53.9. So this would be an indication of not on the services side, dropping activity. Then you got the S&P Flash US Manufacturing PMI, and that was 51.3 last month, and they're thinking it'll drop to 51.0. So the manufacturing folks are increasing shipments. Retail is doing okay. Inventories are up, but the manufacturing purchasing managers are believing that in the future, things are going to get worse. Now, I think this one is a 50, where 50 is the split. And so a 51 could be a positive, just not as positive as last month. Then you've got existing home sales. Last month was 4.14 million. That's existing home sales over the year. And dropping, they're thinking, to 4.07 of existing home sales. And finally, you've got U.S. leading economic indicators, which has been down, I think, I want to say 18 out of the last 19 months or something like that. It was down last month by 0.6, and they're thinking it'll be down again by 0.4. At some point, you have to believe that if the U.S. leading indicators go down month after month after month after month, at some point, it's gotta show up. It's very weird. I don't know how to explain it. Maybe you do. Tell me in the comments below how the U.S. leading economic indicators can go down all the time for 2 years straight, and yet the economy continues to improve. I'm not sure there's a way to justify. Okay, let's go ahead and look at the bonds. What we've got on the bonds right now is we have got bonds in the pre-market up 3.3. That's a little surprising. And the 2-year up 3.4, and the 2-month up only 1.8 basis points. Yeah, I'm not 100% sure why interest rates would be going up right now. Again, I haven't had time to really read the news today. Tomorrow morning, I will bring you back up to date on what the heck is going on that aspect. Okay, then we got oil. Crude oil snaps 3-week losing streak. It was up a little bit last week, as you know, about $3, $4, I think. Right now it's down a tad in the pre-market. Both Brent and Texas Intermediate down about 16 cents. Natural gas down 2.12% again. It had gone way, way up, and now it's backing off. I don't expect that backing off to continue. We'll see. Maybe there's a lot of new production coming on because the price got up real nice and high. So producers who had stopped producing, maybe they're starting to produce again. Gold down 820, sitting at 2,340, really close to where it's been in the middle of its recent space. Silver 0.4 up at 29.59, not back across 30 yet. Copper down 0.13, so close to even at 4.489. And then we've got the euro is weak. The French election is the main cause, but just overall, the overall European, how political situation's unsettled over there. And so that's, of course, the dollar's up compared to the euro. And you've got Bitcoin up 628. So that's some positive news for Bitcoin, 66,752. That's still way off of its all-time high. Now you've got the equities. You've got the Dow down 18 or 0.05. You've got S&P down unchanged. It's just changed an inch. And then the NASDAQ is, wow, oh man, just lost all of it. The app stopped treating me correctly. It really went nuts here. I'm so sorry. And then you got the NASDAQ up 25 or 0.13. So the NASDAQ continues to be the big winner. We'll all see what happens tomorrow morning when it comes to Tesla and what happens when it comes to the overall markets. And I will try to give you updates on some of the news that might be impacting bonds. I'm kind of surprised by that. All right. So that's all I got for you tonight. As always, it has been just absolutely amazing talking to you.